And you're like, wait a minute, Zach, that does not make sense. How can you even get there? I don't even understand. How can home prices fall if interest rates are going down? Hey, it is 2025. Well, not really. But what would happen to the housing market or real estate if interest rates, as predicted, drop in 2025? Like, what will be the outcome? Will it be a smart time to buy a house? Will it be a smart time to sell a house? Will it be a smart time to even be in the real estate market? And these are all valid questions that need to be answered, especially when we're talking about mortgage interest rates. Did you know over 80% of all homes purchased in 2023 had some sort of financing? So mortgage interest rates are a really big deal, especially in the purchase of a home. Now, you probably aren't clueless to mortgage interest rates, especially because it's something that's covered in the news quite a bit. And the reason why it's so important is mortgage interest rates really affect the affordability of the payment. I have a real estate coach that shares with me all the time, Zach, buyers live in the payment, not in the purchase price. And I thought that was really interesting, and I asked why. Why is it that buyers live in the payment and not the purchase price? And they said it's very simple. Most folks live in their home from anywhere to 5 to 7 years. Sometimes it can escalate up to about, on average, 11 years. And in that time, they don't really have realized the entire purchase price. They've actually paid quite a bit more towards that purchase price because of interest. Now, when you start to look at that interest rate added to that purchase price, you start to see a number well over what that list price of that home is. And so this is an important topic to understand, because this is what you're paying back to that mortgage lender that is over and above what you're borrowing. And so mortgage interest rates affect the affordability, and people that are buying homes are more likely to look at their payment and make sure that that payment fits their needs than actual purchase price. Now, when you go through the pre-approval process or getting a process towards getting a loan, a lender will tell you how much you're pre-approved to, but that's just to let you know what the current interest rate is and the principal of that home, along with the estimated taxes and insurance. That is something that's going to fit within your debt-to-income ratio. Now, I just said a whole bunch of real estate jargon. You might be going, let me write that down again, Zach. Tell me that equation. And I've got other videos that will cover this more in depth, but this is all about interest rates. As a payment is structured, you have 4 things that are considered in a conventional mortgage payment, or something that is an average person is paying, which is principal, that is the purchase price, interest, taxes, and insurance. We call it PITI. And the taxes and insurance, those can be or may not be in a payment. And it really depends on the lender if they're going to require that or not. But let's talk about principal and interest. Now, some folks going to buy a home are thinking right off the bat, well, if I take the purchase price and I take the interest rate and I amortize it over 30 years, or I spread it out over 30 years, here's my equal part principal, here's my equal part interest. And that's actually not how it works. When you look at an amortization schedule, you'll actually see for a large portion of the front end of that loan, you're paying primarily towards the interest on the loan than you are the principal. Now, through every payment will have some sort of level of interest and principal, but you will see on the front end it is vastly skewed towards the interest rate. So what will happen to the housing market if interest rates start to go down? Well, you might think the conventional answer is that the housing prices will increase. And where you get that conventional answer from is in 2021, when the interest rates started to hit historical, I'm talking historical lows, where some folks saw sub 3% fixed interest on their home. Those those folks with that fixed interest rate, we saw that housing prices started to escalate, not only in the areas where housing prices were already on a steadily of a gain, but in areas where, fringe areas where there wasn't growth in the real estate market. I remember being in Arkansas in and around that time, and in the state of Arkansas, they had a very average market, where my market in the North Seattle area, more Snohomish County, was actually skewed towards a seller. And they started to see, because of the low interest rates, house prices were increasing because of the amount of demand. What will happen is with a lower interest rate, that actually allows for a lower payment, which increases the number of people that can afford a home. Now, in that, because of also a lack of inventory, a lack of a number of homes for sale, it caused real estate markets to spike, to grow at a rapid pace. So if interest rates go down in 2025, there is a good chance that home prices increase. Another thing is that competition increases to where you will start to see in areas all over the United States multiple offers. And when that happens, that is when people are priced out of homes in a different route, where there's folks that are purchasing a home that has the financial capabilities of purchasing much more, but they're willing to spend much more because of the competition. And so, yes, conventionally, going back in time, we could see in 2025 a marketplace with tremendous amounts of competition and multiple offers, and maybe a bit of a repeat when it comes to 2021. But we also may see where the marketplace actually levels out. And I've actually been seeing it in my own marketplace. As interest rates have stayed pretty steady over the last 6 months, we're starting to see areas start to level out from increases, where there's not large increases or large drops. It becomes a very level market. And how that happens is where the demand, which is going to grow with lower interest rates because affordability goes up, but it's also going to get people that right now that may want to make a move, that they're not quite satisfied with their house, to start to make a move. If someone's living in a home that has a sub 3% loan, they're not necessarily looking to move to a home that has a 6 or 7 or 8% interest rate. And so with that being said, if all of a sudden with the increase in demand, we see an increase in supply and they start to match each other, well, the marketplace will actually start to even out. We won't see large gains. We won't see large amounts of competition. It will just be what we would call more of a normalized real estate market. Now, so if interest rates start to drop in 2025, we could see a really fast moving increase in home prices, or we could see an even market. But there's even a world where if interest rates drop, we could see a place where home prices start to fall. And you're like, wait a minute, Zach, that does not make sense. How can you even get there? I don't even understand. How can home prices fall if interest rates are going down? And again, we go back to that idea of supply and demand. While the demand might be increasing, the supply might increase as well. With the drop of interest rates, with some other economic factors that could be in play, whether high debt, whether there's some other crisis that comes about financially, people could be offloading those second and vacation properties. They could be deciding to, as well as sell their primary home and move to one of those vacation areas. And so the demand may overcome the supply because of the opportunity that a lower interest rate market brings. Now, this last one isn't necessarily it's not something that I would say is probable, but there is a possibility in some of the areas throughout the United States that saw hyper growth in 2021, see hyper reduction in 2025. And so with that, for instance, especially during that time of COVID, businesses were allowing a lot more remote work. Now those businesses are requiring folks to come back into the office, and so some of those folks have been doing a commute for the last 12 months that is one that they wouldn't have done if COVID hadn't happened, where they thought remote work was going to stay. So with that saying, some of those areas that saw hyperinflation in 2021 might see that decline because of people moving out of the area. And so if interest rates drop in 2025, what will happen to the real estate market? I will tell you this, no matter what happens, people are still going to be buying and selling. So is it a good time to buy? Is it a good time to sell? Let's just talk about buying real quick. Yes, it would be a good time to buy if the payment fit what you wanted it to be for your financial situation. Is it a great time to sell? Yes, it would be a great time to sell if you had a plan of where you're going to next. The one thing I want to caution you on is trying to time the marketplace where you buy high, or excuse me, you sell high and you buy low. That doesn't necessarily work out because the real estate marketplace isn't these big waves of up and down. It is jagged, you know, and sometimes it's like jagged going up and sometimes it's jagged going down, but there's so much movement within there. It's so incredibly hard to time the market. And so with that being said, you really want to make sure that if you are thinking about making a move in 2025, that you actually reach out to a professional that has the pulse on the marketplace, because by doing so, what you're going to find is that person is going to be able to tell you, for you, is it the right time to buy? Is it the right time to sell? Is this the right time to make a move? And what is actually happening in your local market? That's one of those last points I'm going to make with you. Real estate is a local marketplace. So where I'm at in Snohomish County, I can't tell you what's happening in Manhattan, New York, or Philadelphia, Pennsylvania, or Miami, Florida, or Dallas, Texas. You really need somebody that is hyper local to that area. And you'll actually find, even in those major metroplexes that I just explained, there isn't a one person that knows all of it. It is really dependent on the neighborhood, the area that you want to move into. Such as a lot of folks come to the Seattle area and they realize the beauty of the city of Seattle, but also what is outside of it. And outside of it, about 30 minutes north of the city, is a beautiful community called Snohomish County that has multiple different cities that fit a lot of great needs, whether it's for outdoors, recreation, there's a lot of great shopping, as well as technology, as jobs. I mean, this is a rich, wealthy area that could definitely fit the needs of a lot of folks, but it's important to know what is best for you. And so that's why I say reach out to a professional. And if you are looking in that Snohomish County area, always know that I am available to chat, and I would love to find out what you're looking for. But again, what will happen in 2025 if interest rates drop? We will see, because here's the thing, is it will still be a good time to buy. It'll still be a good time to sell, as long as it fits what you need personally. Well, I appreciate you watching this video, and up here in the corner of the video here is one that you should check out next. But until next time, remember folks, today is a great day for you to #create positive change. All right, take care.